Google stock is selling off following their fourth quarter earnings update. This is a bit surprising because as we dive into Google or Alphabet's results, they're actually quite strong. You see a reacceleration in terms of their revenue growth. You see, last year revenue was growing 1%. This year it's closer to 13%. You see that they're getting better profitability from 24% profit margin to 27% profit margin. Earnings exploded higher. Diluted earnings per share up over 50% higher year over year from $1.05 to $1.64. This is very strong, high-level results. I'm going to talk about why the stock is selling off in just a second, but as you dive deeper, it is pretty strong across the board. Looking at their ad business, diving in to understand this business, you see Google search and other. This is across various different Alphabet properties, still growing at around 13%. YouTube is just this superpower that is crushing it at 15% growth. This means they're winning the streaming wars. This is just such a powerful platform. Love to see the growth. Google Network, which powers the third-party websites, declined by 2%. Management, I really don't like how management did not comment really why they're losing market share here, which does suggest that either competitors are disrupting the third-party marketplace in terms of advertising. I want to understand this in greater detail. It's not a huge number relative to YouTube or Google Search. Google Search and their other own products, which is higher margin, that's much, much bigger, but it is still a component at around $8 billion in revenue, close to let's say $30 billion in revenue for the year. So it is important to recognize if you have a business line that's not competing exceptionally well. Looking at their Google subscriptions, management talked repeatedly about how they're very excited about their huge growth in subscriptions like paid YouTube subscriptions, as well as their, Google Drive subscriptions. I believe it's called Google One. That's growing 23%. So Google services across the board growing with significant profit margin expansion. This is what I like to see. So around 13% growth in their Google services business. This is still really an ads company. As you can see, 65 billion out of 76 billion in terms of their, Google services revenue is tied to advertising. When you look at their other segments like Google Cloud, this is actually very good relative to the deceleration we saw in prior quarters. So we saw a reacceleration in growth, now close to 26% growth in Google Cloud, which is led by their AI initiatives and, small businesses saying, hey, we want to use Google Cloud. And, you see other bets in hedging. It's relatively small, I'd argue immaterial relative to the total revenue figure of 86 billion. But seeing the strong ad revenue figure, seeing strong Google services, seeing strong Google Cloud, and this is a very favorable development. So I'm sharing a lot of favorable things, and you might go, well, Daniel, why is the stock selling off? We'll talk about that in just a second. Total revenues up 13% plus. Their cost of acquisition of content did creep up higher. Partly this is due to, them saying, hey, we want to introduce more and more sports content on YouTube, and also paying for the right to have the default search engine, position with, Apple. So you do see that cost there, as well as a really interesting development with the number of employees down 4% year over year. So you have this growth, and you don't need as many people to deliver on it. So this reflects that management really is focused, and they've been talking about this for the better part of 2 years. Management really is focused on getting better profitability, better free cash flow. You're seeing margins expand. You're seeing free cash flow continue to grow. And here's a picture of their cash flow statement where you can see last year they did around 60 billion in free cash flow. This year it's closer to $70 billion in free cash flow. That is a lot of free cash flow that Google is producing. The quarter itself generated, you're going to have lumpy quarters. That's just the reality of how these things work. But over the year, it's important to recognize that their free cash flow is still creeping higher. One thing Wall Street didn't particularly care to hear was that management does expect to accelerate their investments in capital expenditures, partly to deal with this AI revolution, investing in all this infrastructure, but still looking at Alphabet, thinking about that $70 billion in free cash flow that they expect to grow going forward with, hey, you don't need to expand that headcount. It's not like this is trading at a crazy valuation, around $1.8 trillion versus $70 billion in free cash flow. That means you're trading around 25 times free cash flow. So this is not, I'd argue, deeply expensive, irrational territory. If this were 50, 60 times free cash flow, I'd start saying, well, that's kind of tough to justify given, let's say teens level growth. But given where they're at, this strikes me as very reasonable. And they're using that free cash flow to reduce the shares outstanding. And you could see that they, if you trade around 25 times free cash flow and you use most of that free cash flow to buy back stock, that'll reduce your shares by about 4%. And so you could see there was about a 3% reduction in shares outstanding year over year, from 12.9 billion shares to 12.6 billion shares, comparing it year over year. So I've shared all these favorable developments, and I'd argue the quarter was actually quite strong. Then why is the stock selling off after hours? Depending on the minute, it might be down 5, 6, 7%. Well, first, in full disclosure, this is not financial advice. I do own a small position in Google stock. I discuss more with my members at unrivaledinvesting.com. And also, quick plug, recently on our exclusive Discord server, a member relayed to me that the Unrivaled Investing premium subscription that he has the best, this is a direct quote, the best cost performance ratio relative to alternative investing subscription services available. So that's a direct quote from a customer. So if you're looking for compelling investment ideas, arguably at a very reasonable price, consider Unrivaled Investing, which includes a weekly letter and my personal portfolio updates in real time. We also have educational materials, which I designed for folks as if I were starting Wall Street, what I wanted to know when I first started on Wall Street, working for a multi-billion-dollar hedge fund, things that sort of got me up to speed. This is on how to read financial statements and how to think about valuation. So those are two different courses also available. So why is Google stock selling off after arguably a very strong fourth quarter? I think it comes down to the price, where you're looking at very strong performance of Google, up over 50% this past year. And when you have something that just consistently marches higher, it means that you not only have to deliver, you have to blow expectations out of the water. And I think what you're seeing here is that they didn't. And if you don't deliver, where you just don't overly, execute, where they delivered solid results. Like, let me repeat this. They delivered very, very strong results. But if the stock just keeps marching higher and people expect you to deliver very, very strong results, then you might sell off occasionally when you report something that's just in line with already high expectations. So I think that's what you're seeing here with Google. I think another key aspect that investors need to consider, and I think this is something that's going to hold Google stock back if it's not executed on really well, which is the threat of artificial intelligence. I've talked about this repeatedly. Management talks about how, they're bringing in the new Gemini era. They talked about that during the call. I think artificial intelligence, AI, and the generative search experience could disrupt their legacy model. It is something for investors to watch. And partly it's a concern for investors because their product really isn't up to snuff yet. Here is the answer from Google Bard. And this is another example that even though they keep talking about, we keep launching these new products and Bard is powered by their Gemini model and look how powerful it is, you can do this yourself. You can ask Google's Bard, can you discuss Alphabet's fourth quarter 2023 earnings? This is what I just did a few minutes ago. And she goes, oh, yeah, they just came out last Tuesday, January 23rd. No, it got the date wrong. It was today that it came out, January 30th. I believe today. Yeah, January 30th. And so then they talk about, they get the revenue right, 86.3 billion, I believe, but then it gets the EPS wrong. So immediately you can't trust the figures if you're using Bard. And then it talks about Google Cloud posting 53% growth. It posted closer to 25% growth. So this is littered with problems because it's pulling from multiple different transcripts, multiple different periods. It's not getting it right. It doesn't quite understand. No. We're talking about the fourth quarter. And this is the concern is wait a second, Google's AI isn't up to snuff. I personally, for my investment research purposes, I use AI Ticker Chat. I'm one of the co-founders. I wanted to make sure we built a product that is helpful for people that doesn't have this type of, hallucination. And so here it is, the exact same prompt. Can you discuss Alphabet's fourth quarter 2023 earnings? I'm selecting the recent 8K that came out and it nails it. It's pulling straight from the source document, talking about getting the revenue right, getting the earnings right, earnings per share of $1.64. It's getting it right. And critically, even just with this one prompt, it's getting the solution right, the conclusion right, where it talks about, look, it paints a picture of a company that is not only growing financially, but is also strategically positioned for future advancements, especially in AI. This is what management is talking about. They talk about the successful turnaround of Google Cloud, which is something that they've been focusing on, along with sustained growth in core areas like search and YouTube. So this captures the key aspects, like Ruth Porat, the CFO, talking about durably re-engineering our cost basis. She's been talking about this for a while, talking about the Gemini era. These are the key concepts to take away from this press release, which is that, management's trying to improve their cost structure, which they're doing, and you're seeing significant improved profitability. And it is this new AI era, but arguably using ChatGPT, which is, half owned by Microsoft, delivers a better product. When you apply GPT-4 to AI ticker chat, pulling the correct source document. So I think this does reflect the uncertainty of, will people be trusting Google the way they did in the past? But by and large, looking at these results, I think Google is still on track. I haven't seen something where it's saying, hey, you're getting dramatically off track. And that's something to watch for, because this AI is both an opportunity and a threat to Google. I don't think the valuation's particularly rich. That said, it is tied to advertising. It wouldn't surprise me if there's ever a concern of a recession. A lot of folks previously thought it could happen. I previously thought it did too. It could too, but people are currently pricing in a recession as close to 0% chance. I think it's much higher than that. And if that chance comes to fruition, I think you could see that pressure on Google. But by and large, you're not seeing it in the numbers right now. Google is on track. They're delivering. I think this might just be an example of a stock that, just has run a lot and the fundamentals are catching up. And, periodically you have these pullbacks where, it's not quite up to snuff. You deliver arguably fantastic results, but Wall Street has even loftier expectations. Overall, looking at this, Google really does still seem to be on track. I hope this video has been helpful for you. If so, please make a point of hitting that thumbs up, hit that subscribe button, and also feel free to check out unrivaledinvesting.com. Thanks so much for tuning in.